Hello everybody. We have published our latest edition of our Global Monetary Conditions Monitor. In the monitor we look at monetary conditions across 26 countries in the world. Our clients often ask us, how should we use the monitor if we are investors? Well, there is nothing directly about investment in the monitor. The purpose of the monitor is to assess monetary conditions. It is to say, is monetary conditions too easy or too tight relative to the targets of different central banks? However, that tells you something which you can use as input in the investment process. What I'll now do is to try to illustrate how you could think of that for the currency markets. Why the currency markets? Well, because the center of focus in the monitor this month is exactly on the currency markets, more specifically what is happening to the euro dollar, but I want to have a broader look here across countries. First of all, our starting point is we want to look at countries in which we think there will be larger changes in monetary conditions going forward relative to market pricing, countries that will ease somewhat or tighten somewhat relative to market expectations, and of course that would ease or that would move currencies. So how do we assess expected changes in monetary policy? Well, what we do is that we look at the level of credibility of central banks and combine that with the present level of monetary conditions. So assume we have a very credible central bank. For example, the Reserve Bank of New Zealand. We argue, in fact, the most credible central bank in the world. If the Reserve Bank of New Zealand has too tight or too easy monetary policy, we should expect it to move towards neutral monetary policy as it corrects its policy mistakes, so to speak. It would mean revert on monetary policy, and that should move currencies. So what we do is in the monitor, we look at the level of credibility and combine that with present monetary conditions, and from that we calculate our assumed change in monetary conditions going forward. So what we ideally is looking for, let's say we want to buy currencies where we expect monetary policy to be tightened. Well, we find some of these candidates in the monitor. But buying a currency is not only about monetary policy, it's also about is the currency overvalued or undervalued on a fundamental level, for example, measured by purchasing power parity. And on the other hand, you should also look at how are fundamentals, how is the current account situation, how is public finances, how is productivity growth, and we can use that. So combining valuation and fundamentals with expected monetary change, we can find candidates for currencies that would either weaken or strengthen going forward, let's say the next 6 to 12 months. And we are in luck. When we look across currencies, we could look at these three factors and identify some buy currencies. I should stress, this is not an investment advice, this is an illustration of how to use the monitor if you are an investor. So we would like to find currencies that have all of this. Do we have currencies where we need to tighten monetary policy? Yes, we have currencies like that. Do we have undervalued currencies? Yes. And do we have currencies with strong fundamentals, sound public finances, current account surpluses, etc.? Well, in fact, when we look at these three factors, we're in luck. We have three candidates that all would fit into the center, who have all of these. First of all, we have the Swedish krona, by far the one we have been highlighting the most. In fact, back in November, we argued that the Swedish krona or the Swedish Riksbank ought to tighten monetary policy. And as we've seen, actually since November, the Swedish krona tended to go stronger, but it's still undervalued on a PPP basis. Fundamentals are strong, and we argue that sooner or later the Riksbank will have to change course. Pretty good or strong arguments in our view for a stronger Swedish krona. But do we have other similar candidates? Well, we have the Mexican peso. And why is that? Well, we all know that Trump has caused havoc for the Mexican peso. It has come back somewhat, but it's still cheap on a fundamental level. However, on the monetary policy side, in our view, it looks like the Bank of Mexico still is likely to overshoot its inflation target unless it tightens monetary conditions. And within the last couple of days, Central Bank Governor Carstens of Mexico has been out signaling, well, we have been hiking interest rates, but we will pause for now, but we will certainly not cut rates in the near future, of fairly hawkish statements again supporters of the Mexican peso. And guess what? Third candidate, the Russian ruble. Public finances and the current account situation in Russia is actually relatively positive. Despite of all the politics and the uncertainty, the fundamentals look fairly sound. The ruble, it's cheap on a PPP basis, and we think that the Russian central bank should tighten monetary policy relative to market expectations. Why is that? Well, because our monetary conditions indicator is pointing upwards and have been pointing upwards recently. Monetary conditions is fairly close to where they should be, but that being said, the Russian central bank probably will lead in a tighter direction relative to market expectations after cutting rates over at least the past year. That brings that. So those are all relatively strong signals of appreciating currencies. How about we look at the other side? Well, we're looking for countries where we see an expectations of easing of monetary conditions. That would be countries where monetary conditions presently are too tight to hit the inflation target, and where the central banks historically has been correcting their mistakes, so to speak, have been leaning against the wind. So we have a number of these. The US or the Eurozone both are in that direction, but we have more interesting where we see bigger changes than that. So what candidates do we have here? We don't have any clear-cut candidates. We don't have any candidates where the fundamentals are bad, the currencies are overvalued, and where we're moving in easy direction. There are none of those. Either the currencies are strong and have strong fundamentals, but we need to tighten monetary policy rather than ease. But we have somebody where we have 2 out of 3. So first of all, do we have currencies which are overvalued and where the central banks actually need to ease monetary policy? Well, we have 2 of those. We have Israel and we have Switzerland. In both countries, monetary policy is presently too tight. Interestingly enough, both central banks have historically been quite eager to use the exchange rate to pass through monetary conditions. So that makes those 2 currencies, the Israeli shekel and the Swiss franc, interesting. And if you look at the purchasing power parity, both currencies look overvalued relative to present historical levels. However, if we look at the fundamentals, we all know that both countries have quite strong fundamentals, so that is not exactly pushing the currencies in a weaker direction, but at least on a valuation basis and on a monetary policy basis, you are having a negative signals for the Israeli shekel and for the Swiss franc. So do we have other currencies that could be candidates in this direction? Yes, we have the Japanese yen. Again, monetary policy need to be eased. We are still not at the Bank of Japan's 2% inflation target. The Bank of Japan has been quite eager to move in that direction and has been doing the right thing overall. And we have seen an easing of monetary conditions, but they're still too tight to hit the 2% inflation target. Therefore, we should expect the Bank of Japan, under the leadership of the forceful Governor Kuroda, to continue to push and to try to ease monetary conditions. And that could weaken the yen further. That is also the case, of course, because Japanese fundamentals, particularly public debt, is not superb. That being said, the currency, probably on a PPP basis, is not overvalued. So that brings us down here. So we don't have the strong sell, but we have at least 3 currencies where we have 2 out of 3 on the weakening side. Again, this is not investment advice, but I here have you some way of thinking about currencies and what signals you can read from our Global Monetary Conditions Monitor. Have a look. Take care.